Although slightly lower Wednesday, gold prices are still up 27% year to date. So who is really buying gold here and why? Joining us today is Nick Colas, Chief Market Strategist over at Convergex. Nick, thanks so much for being in studio. Good to have you on the show.
Thanks so much.
So up 27%. We'll kind of ignore gold's activity here this Wednesday. But what do you feel is behind this rally here?
There's been a couple of different vectors where demand's coming from. Clearly, ETFs are an important source of demand, and you've seen some $15 billion of fresh money flow into the gold ETFs just year to date, and that's been pretty steady through the course of the year. In addition, you're seeing some demand from the physical side, coins and bullion as well. So it really is a couple of different sources of demand making gold go higher.
Well, I guess the question is, where do we go from here? Do you have a price forecast for gold this year, for the rest of the year?
I think gold can easily get to the $1,400 to $1,500 an ounce range just based on current fundamentals, and that's before you consider anything like any kind of shock that a lot of folks who invest in gold are looking for as well. Add that into the mix, it obviously goes higher.
You mentioned the ETF demand, and that's one thing people bring up is, look, maybe the trade is just too crowded right now. But you did an interesting Google trend search, and you actually found that there's still space here and that not that many people are searching, buy, sell gold. Talk to us a little bit about that.
Yeah, exactly. If you think of gold and Google searches as a proxy for demand,
right,
then you look at Google Trends, which is a great tool, and you search how many people are looking for phrases like buy gold or buy gold coins or sell gold. And what you find is that compared to the 2011 highs, we're still only 50 to 70% of those levels. So as crowded as that trade might have been in 2011, we're nowhere near those levels today. In other words, there's still more incremental interest for gold before we get back to those levels we saw back when gold was $1,800 plus an ounce. So there's still a ways to go.
So do you think we'll get back to those levels?
I think it is a matter of time. Look, gold is ultimately a very complex instrument to value because there's a lot of psychology behind it. But at the end of the day, there's growing concern about central banks' ability to continue to stimulate global economies with things like negative interest rates and quantitative easing and other things that central banks have done for the past 5 years. And against that backdrop, it makes sense to think that gold can still go higher because those concerns are only now beginning to really turn into something more full-blown.
And Nick, you have a really interesting history with gold. We were talking offline about that. How do you see gold? Is it a safe haven for you? Is it a currency? How do you see it?
I see it as a little bit of everything. I think it is one way to hold and preserve wealth over the course of a generation for yourself and for your family in a way that is not tied up in the financial system. So for example, my family left Cuba in 1960 and had nothing when they came to this country and were literally impoverished with no savings. And my family always regretted not having some gold when they came to this country as a buffer, as a way to basically make their way in a new country. They didn't think they were going to have to stay as long as they have, and they're all full citizens now. But they wish they had begun here with a little bit more of a backstop, and gold could have provided that. So the first thing they bought when they got some money in their pocket was a few ounces of gold.
Now let's talk about the fuel behind gold here. We mentioned the ETF demand. That's really what's driving it here. But what about the stickier forms? We're not seeing as high as jewelry demand, for example, coming out of China and India. Does that concern you?
Yes, obviously the jewelry part of gold demand, particularly from India, as you mentioned, with wedding season
right,
coming up, and China as well, being a very strong consumer of gold as the middle class has grown in size and power in that country, are going to be some of the negative sides of the demand equation. On the positive side really is this investment demand in the ETF demand. That's what really has replaced the decline in demand from India and China in the last 24 months.
Switching gears here, investors seem to be taking a more risk-on approach to investing, especially in the second half of the year here. How do you see equity markets?
Equity markets feel fairly toppy. Valuations are pretty stretched. Not that they can't get a little more stretched. I'm not really in the bear camp because interest rates are so low. But as I talk to institutional investors, they are fundamentally concerned. They worry that earnings have to begin to grow pretty quickly in order to hold the current levels, and interest rates have to stay low. And that requires two things instead of just one. So the people are a little bit concerned.
Nick Colas, thank you so much for coming by the studio. It was a pleasure meeting you.
Thank you.
And thanks for watching this edition of Kitco's Gold Report. We have Gerald Celente coming up next. Stay tuned.